Okay, we've got to the final video for property, plant, and equipment, and the final thing that you would record when it comes to this. And this is when we actually go to dispose of this property, plant, and equipment. So there could be several reasons. When we say dispose, it means you're getting rid of it. So maybe you sell it for something else, or you exchange it for a different item, or it's at the end of its useful life and it's garbage, so you just throw it away or discard it. So either way, or whatever the reason, we need to get this off of our accounting records because we no longer have the item. So the asset might be worn out, obsolete, no longer useful, or you just want something new. Regardless of what the reason is, we record these in the same way. So these are the 4 steps that you use when you're disposing of property, plant, and equipment. The first thing you need to do is determine what your current accumulated amortization is. So how much amortization has been booked up to that point. And then if it's needed, you need to bring the amortization up to date. So record a partial period if needed. So for example, let's say the business records amortization annually at December 31st. Well, if they dispose of a piece of equipment on March 31st, now they haven't recorded anything for January, February, and March of that year. So we would need to bring that up to date by recording 3 months worth of amortization on that. So you figure out where you're at, bring it up to date if needed, and then you know now what your accumulated amortization is. You use that in step 2, where you calculate the book value of the asset. And remember, this is cost minus our accumulated amortization. Once you've got that, you can actually now calculate the gain or loss on sale. So it's unlikely that, or not unlikely, but it happens where you sell or dispose of the asset and the proceeds that you get are not equal to the book value. So this is where you have what's called a gain or a loss on disposal. So you take what are your proceeds on disposal and minus the book value that we calculated above. If you get a positive number, so you're selling it for more than the value on the books, that's a gain. If you get a negative, it's a loss. Now, once you've got all of this information, you can go ahead and record your journal entry. So we're going to close the accumulated amortization for that asset and close the PP&E account. So debit accumulated amortization based on the value we found in number 1. We'll close the PP&E account and we close the cost, so get rid of that cost. We'll then record the proceeds received or a trade-in value, which we'll look at in the future. But if you sell it for cash, you would record a debit for that cash. And then if there was one, you would record any gain or loss. So we'll look at an example here. On January 17th, or January 1st, 2017, we purchased some equipment for $80,000. The equipment was amortized using the straight line method, and it had an estimated useful life of 4 years. Our year end is December 31st, and that's when we record our amortization, so once a year. Today is January 1st, 2020, and we decide to sell the equipment and upgrade to a newer model. We sell that original equipment for $14,000, so we need to record the disposal. We're going to do this in our 4 steps. So the first thing we do is determine our current accumulated amortization, and if needed, we'll bring that up to date. So we now use what we know about amortization. So we're using the straight line method, and we know that that amortization is calculated as cost minus residual value divided by estimated useful life. So for example here, the cost is $80,000. We see that above. It doesn't say anything about a residual, so if you're not told one, you just assume it's 0. So 80 minus 0, and our estimated useful life is noted there as 4 years. So we divide that by 4, and 80,000 divided by 4 is $20,000 per year. So for the start of the life of this asset, however long we had the equipment, we're recording $20,000 per year. So now we ask ourselves, how long have you had it? Well, we bought it January 1st, 2017, so we had it for all of 2017. We're not selling it until January 1st, 2020. So we had it for 2017, 2018, and 2019. So 1, 2, 3. 3 years. And I'm not adding those, it's an and sign. So now we say, well, we've had it for 3 years, and each year we know we recorded $20,000 of amortization. So at this point, we've recorded $60,000. So that's where we're sitting at right now as at December 31st, 2019. We would have recorded that year. So we figured out where we're at. Now we ask the question, are we up to date? Well, in this case, we are, because we recorded this amortization at December 31st, and now we're selling it on January 1st. So no time has passed. We don't need to book any new amounts. So this $60,000, that is our accumulated amortization in this case. So that's our part 1. Part 2 says calculate the book value. So we can do that next. So this was step 1. Step 2, book value equals cost minus accumulated amortization. So here our cost was the $80,000. Our accumulated is $60,000. That's what we just calculated. So our book value is $20,000. That's what we're sitting at. Okay, so that's step 1, step 2 done. Now we need to do step 3. Calculate the gain or loss. And we calculate this as proceeds minus book value. So part 3 is our gain or loss. And this is equal to your proceeds minus the book value. So our proceeds, we look up to the question, and it says we sell the original equipment for $14,000. So that is our proceeds. We subtract the book value of $20,000 that we just calculated. So we're doing this in steps. And here, $14,000 minus $20,000, we get a negative $6,000. So we sold it for $14,000, which is less than we have as the value on our accounting records. So if we're selling it for less, this is a loss. When you get to that negative, you've got a loss. Okay, now we have all of our information, and we just need to record the journal entry. So I always start with the same 2 things that will be in every entry. You're always going to debit accumulated amortization for whatever the amount is. So, sorry, I'm running out of room here. Accumulated amortization for equipment. And we calculated that in step 1. So right here, this $60,000, that's the amount we had as our accumulated. So that's what we need to get rid of. That's what would be in that account. You're going to credit your asset account. So in this case, we have equipment. So we credit equipment. And this is at the cost. So the original cost was $80,000. So that's what we get off of the books. And then from there, you say, well, what did you get? Well, we sold it for $14,000. We're going to debit cash because that's the amount we got. And then the last step, because we can see here our debits don't equal our credits. We're at 74,000 versus 80. The last part there is a loss that we need to book. And you could make a note. I don't have much room here, but if you have a gain, it will be a credit. If you have a loss, it will be a debit. So you might want to make that note on this slide before. So in our case, we have a loss, and therefore we're going to debit that. And the account we use will say loss on disposal of PP&E. And we calculated that as 6,000. And now we've got everything that we're calculating, we've got in there. So we've figured out this loss. We used that in our entry. Used our accumulated. We know the cost from the question and the cash from the question. So we've got everything, and it's always good to double check, do your debits equal your credits? And here, 60,000 plus 14 plus 6 equals 80,000. So our debits do equal our credits. We've got everything in there. Okay, so that is one example of recording a disposal. You always use these 4 steps, and it helps break it out. And as you follow the steps, then you should get to an entry that matches. So you can try S10-13 on your own as practice. Try it out, and then I'll have a solution video in the practice area. And these ones are both pretty basic ones. So just note that in our live class on Thursday, we're going to go through more examples of disposals and look at some more complicated ones. So make sure you're ready for that and are able to watch those, because more complicated you're going to see.